Good morning. This is the VSA Morning Miner on Thursday, the 16th of March. David Scriven. I'm with Paul Rankin. How are you, sir?
All right. Thank you. Very well. Very well.
Good to hear it. So let's kick off with Fortuna Silver, because I just noted that their results include an impairment charge, and it's Yaramoko. And it's just to highlight that the industry is facing inflation and its impact on capital costs. So, they're not alone, but it's worth highlighting this particular aspect for them and others. But let's move on to Endeavour Mining.
Yes, they published their annual statement out today with a 3% fall in gold production to exactly 1.4 million ounces for the year, while their all-in sustaining costs rose by 7% across the group to $928 US per ounce. Net cash rose by nearly 60% to 121 million on their 6 operating mines. They have 27 million ounces in measured and indicated compliant resources and nearly 17 million ounces in proven and probable reserves across their properties. Also in the past year, they joined the premium segment of the LSE. And they did $299 million worth of dividends and share buybacks in 2022, and over the 2-year period, that total was $637 million. So they're definitely making nice progress here in West Africa. They've got also expansion underway on the Sabodala-Massawa mine complex, as well as a greenfield development project on another mine called Lafigué, and a discovery made this past year in the Asafu deposit of the Tanda Iguela project. So plenty going on at Endeavour to keep things moving.
Yeah, very interesting news and robust financials. And perhaps the same can be said of Centamin, where they had both guidance and cost in line and got 40% margins.
Yes, that's right. Came up with full year results released today for them as well. London quoted Centamin with gold operations in Egypt. Revenue of $788 million on 439,000 ounces produced at an average gold price sold at $1,794 an ounce. EBITDA came in with a 40% margin at $319 million US. The Sukari gold production was 441,000 ounces for a 6% increase on 2021, and that was within the guidance. And they have progressed their newest mine, Doropo PFS, to imminent completion, so we would expect those numbers to come out within days to weeks, I would say, here at this point. Doropo being outside of Egypt, so it would be their first mine development outside of that country. Guidance is unchanged for 2023, something over 450,000 ounces they're expecting, and cash costs at something over $840 US an ounce, and all-in sustaining cost guidance to stay under $1,400 an ounce.
Yeah, and I think their sort of sell price was $1,794. So let's hope gold stays in vogue and goes higher, and they'll be making even more. But should we move on to Atlantic Lithium?
Atlantic Lithium also with interim results out today. Or I should say they came out yesterday, that Atlantic Lithium being the Ghana explorer for lithium. And they're also a Shanghai Mining Club member. They ended the interim period with a cash position of $19 million Australian, and had expensed about 12.7 million Australian for exploration and evaluation expenditures up to the 31st of December. They had expanded the Ewoyaa deposits near the coast in Ghana, the lithium pegmatites post-period end to in excess of 35 million tons at 1.25% Li2O. And those are still growing, as many of those pegmatites are still open-ended in drilling. And over the period, they also made a mining license application to go ahead with development and construction on Ewoyaa, simply because all the numbers that they're creating to this point through PEA and PFS and so forth numbers being created are exceptionally profitable as far as what the economics will be. So we can understand they're going to pursue that with haste, I would say.
Understood. There were quite a few people who reported. Anybody else you'd like to add in?
Just comments here for on the full year results from Polymetal too, which is the #2 Russian gold producer. Their revenue was down by 3% to 2.8 billion, of which 933 million was generated from operations in Kazakhstan and the remainder from operations in Russia. Again, this company is specifically impacted by the sanctions against Russia and is therefore considering for shareholders how best to split the two performing nations into separate entities such that it can maintain its London listing, for instance, and also be able to sell its Kazakhstan gold in a more direct and timely manner. Total cash cost came in $942 US dollars per ounce, and all-in sustaining costs were at $1,344 gold equivalent, which was up 31%. So really significant increase in their cost.
Understood. We might draw it to a close unless you'd like to add any other further comments.
That'll do it for today.
Paul, thank you very much indeed, and we wish our listeners a very good day.
And see you tomorrow.
Thanks.